Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of this video is how to trade like a high frequency traders using the MACD indicators, part 3. If you have not watched part 1 and part 2, you may do so before watching this. In the first part of the video, we were using the standard MACD 12.26.9. In the second part of the video, we were using what I call a faster MACD 8.34.9 and also MACD 5.34.9. One thing we should understand is that if a high frequency trading firm wants to use MACD for their trading algorithm, they will create their strategy and they will test it and they will compare it to various modification to the rules before they will trade it. So they will not just come and start applying one algorithm. They will test them and compare them and decide which one is more viable. All right, this is very important. In this third part of the video, we're going to use a different type of MACD with different strategies. All right, and also we want to understand that there are two types of high frequency trading. One is a technical high frequency trading, and the other is the fundamental high frequency trading. And when we are talking about the fundamental high frequency trading, we are talking about the speed at which we are getting the major economy news. We want to be the first person or the first group that have access to major economy news. All right, but here we are discussing a technical high frequency trading using the moving average convergence divergence indicator. All right, what I'm going to do now, I'm going to change the setting of MACD. As I explained to you also, these trades, algorithm trades, are not taken by human being. They are taken by computers. So these are automatic signal, automatic trades that are executed by computers. All right. So we were using a standard MACD, and then we were using a faster MACD. What I'm going to do in this strategy, we're going to use a slower MACD, a MACD that is slower than the standard MACD. As I explained to you, when we want to speed up MACD, we need to reduce the setting of MACD. When we want to slow MACD down, we must increase the setting of MACD. So this, because the standard MACD is 12, we're going to use a higher MACD. I'm going to use MACD 20. All right. So I'm setting my MACD to 20. You see here. All right. I'm going to use 20, 50. The zero line. I will set it at 50. All right. And also, what I'm going to do, I will change also the color of my MACD, so you know that that's the slower one. So I will change the color of my MACD to orange. All right, that's my MACD there. Okay, and one more thing, because it's slower MACD, I will reduce the thickness of my MACD because it's a very thick. When you are using a faster MACD, it's better to use a thick like this. If you want to wait until you see that it's a clear cut. So because I'm using a very slow MACD, I'm not going to make it very thick. I will reduce it down, slim it down a bit. This will do. So I'll make my MACD slimmer now. I hope lady will like that because they always like to be slim. And also another thing I'm going to do, because my MACD is very, very slow, you can see it's 20. All right, my signal line, I want to speed up my signal line. Though my MACD is very, very slow, I want to speed the moving average of the MACD itself. So instead of using the moving average 9 of MACD as my signal line, I will use the signal line 7. That's it. These are modifications that I've done to my MACD. I know my MACD is very slow, but I speed up a little bit the signal line, so I do not end up, taking wrong trade. Now we're going to go to the rules. As you know, a high frequency trader will program their computer, so there are different rules. Okay, we are talking about just ordinary rules, but there are other rules like the time of the day, all right? Whether do we have some high impact news that are due. So these are all taken into consideration. But this is just a general rules, okay? That the primary rules that one can set. One is building an algorithm, okay? So these are rules that the computer will obey, okay, or will execute when, the trade is taking place, all right? So because my MACD is very slow, I'm not an aggressive, high frequency trader, or I'm using a different account, or a high frequency trading firm may use a different strategies, of which means different algorithm for different financial instruments and also for different purposes. The rule will be different in each case, but always, though the computers are taking the trade, there are people sitting down and monitoring the performance of these algorithms. So, for instance, if at the opening bell, we notice that you sit, you are one of the supervisors monitoring the performance of this. You can set everything automatically, but always you will have human beings sitting somewhere and monitoring these activity taking place. And at any point they can decide to switch it off or to stop it taking trade completely, depending on the market environment. This is very important, and also the time of the year, all right? So there are various criteria that are taken into consideration when one is, writing those, trading rules that the computer should follow, all right? I'm going to make it very simple in this case. All I'm going to say is that because my market is very slow, in this scenario, ladies and gentlemen, the financial instrument that we are trading here, this is the Dow Jones Index. It's a very fast financial instrument, as I explained to you in the previous video. The high frequency trade financial instruments that are moving very fast. So do not, if you want to build your own algorithm, do not go and apply it to some crazy financial instrument. You will just waste your money. And one thing also I need to mention that the high frequency trader, so the computer will have a set of rules based also on the stop loss, all right? Should be the same stop loss for each financial instrument. These rules will be tested first, verified, They will be compared to other strategy, and they will select the best, a trading strategy. Sometimes some of the strategy may be perfect for another financial instrument, but may not be suitable for, another one, And also another strategy may be valid during the first 2 hours when New York is open, or the first 2 hours when a market is open, or may not be applicable when, London is closed, for instance, all right? These can be different rules. They can use a different algorithm when London is closed up to the time, Tokyo will open, all right? So this is the rule I'm setting for this, slower MACD. MACD crosses a bull signal line clearly like this. We want it to be clear, all right? So we can set this rule with the computers, the angle, everything, and the computer will know that it's clear cut. So what we can say MACD cross above the signal line. So we will say if the second candle is higher than the first one, we will buy. You can do that to filter out false signal. So for instance here, when MACD crosses above, you can see here there was a bit messy here. You may say when MACD crosses below a signal line, do not sell straight away. Wait until the second candle is also bearish. So this will allow you to filter out, false signal. So now, but I don't want to go too deeply into this because I'm not a computer programmer, but I'm a trader, So here we are. So The rule is very simple. MACD crosses MACD 2057, crosses above the signal line, we will buy. We will not close the trade, all right? We may take the first profit as soon as the price hits the first and nearest resistance level. We will let the rest of the trade run until MACD crosses below a signal line. Right here. We will come out of the trade here. So MACD, the slower MACD crosses above the signal line, we will buy. We take our profit as the price reaches the first and nearest resistance level. Right here, it's the resistance zone. So as we buy here, you can see the price you buy here, and where you can see it run even fast through it. Alright, so what the strategy that we had discussed in the first part of this series of video will be applicable here. They will buy again. You see which it did here. But above the first near resistance level, and they buy it again. Okay, until MACD crosses below signal line. Now what we are doing, because we are using a slower MACD, a MACD 2057 crosses above signal line, we buy. Computer will take profit at the first and near resistance level right here. Doesn't matter. 2 pip, 3 pip. That's enough. This is a high frequency trading. All right. We will let the rest of the trade run until MACD crosses below signal line. Now you have to understand that in this case, okay, depending on our risk tolerance, we may even decide that when MACD 2057 crosses above signal line, buy and stay in the trade up to the point MACD crosses below signal line. So this strategy is about catching a bigger move, and we are more willing to have a losing trades, but we know that in the long run, after testing, of course, all right, that this strategy is still viable, all right. So for instance, we may say, okay, MACD 2057 crosses above signal line, we buy, we do not take any profit, which is risky, or we may decide to move stop loss, but without closing the trade. So we may move our stop loss, how much stop loss we are using, we may decide to move our stop loss to break even, okay, that would be excellent strategy, and then let the trade run until MACD crosses back below signal line. All right, so that will be more, okay, reasonable rules. So if you want to remain the trade for long, as the trend is in profit, we will move our stop loss to break even. These are programs that we can set and allowing the computers to take this trade, because our MACD is a slower MACD. All right. So here again, as you can see, as soon as MACD crosses below signal line, in this case, we will not come out of the trade. You see here this trade, we may let it run, or we may set the rules that we move our stop loss to break even. All right, so here you roll it down to break even. All right, so we may tell the computer to move our stop loss to break even entry point. And as we see here, the price start going up, we will be taken out of the trade at a zero loss. All right, okay. But here you can see that the MACD did not cross back, okay, did not cross above the signal line. Was trying to, but it didn't. It was not a clear cut. So with that strategy, meaning that the MACD 2057 crosses below signal line, we shall either we may set a rule to take profit at the first and nearest support level, or we may decide to catch a bigger move. That strategy, okay, is a bit risky compared to the one that is taking profits at the first and nearest, okay, support level after a sell signal. But one can control the risk by setting another rule, asking the computer to move the stop loss to break even as soon as we are in profit. So in this case, we enter this trade here. So we go down maybe 2 or 3 pips, computer moves stop loss to break even, all right, automatically. And as you can see, the price went back again to our entry point. We are taken out of that trade at a zero loss, depending on the rule that we are applying in this case, all right. And as you can see, sometimes we may get into trouble because if the price oscillating, because in this case, our strategy is not based on the price itself, which is the number one indicator. I will be recording another video about high frequency trading using the price itself. And I should demonstrate to you how one can set the rules when one is applying the high frequency trading using the price itself. I think that's the best way. But there is a bit of aggression also when this type of high frequency, traders are using the price alone, which I will discuss with you in another, series of video, on this channel, all right? But as you can see, there are different ways that a high frequency trader may use the MACD indicator. I did not discuss MACD crossing below a signal line or MACD going above a signal line. I will record another video and I will discuss my own recommendation to this market participant, what they need to do, to avoid distortion, because since 2008 up to now, the market is saturated with a lot of distortion, and the price does not hide it. I will also record a series of videos, about how, to trade like high frequency traders using the stochastic, using the RSI indicator, and also using the price itself. I will, on this channel, I'll continue this discussion about high frequency trading, explaining to traders, the role of a high frequency trading firm, their goal, their objectives, and why, in the recent year, we have, a great number of high frequency trading firm. I hope you have learned something from this video also, and I will put it into use, to make excellent trading decisions. The purpose of this video is not to criticize high frequency traders, but to explain to traders what is a high frequency trading, talking about a technical analysis. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders. Speak to you soon.